Thank you for coming on into the live and sharing your essence with me. This eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And boom, Bitcoin went to the downside as predicted, coming down in far exceeding our expectations beneath that support level of the 43.9 region, and gobbling up that liquidity and going all the way down to the bottom of this channel, which is to say this diagonal pitch fan. We've had pricing since last year in January. As far as keeping predictive paths, it has been very nice in predicting ups and downs and fatigue points. So we came back to the 706 of this diagonal pitch fan, bounced off of that, some liquidity down there to recoup. Let's go see what that liquidity is like. What do I mean by that? Well, I'm looking at high block here. What is high block? People lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. So we were looking at a pool down here at 43.96. Let me go ahead and turn max liquidity on here. Boo, 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 boo. Basically at that $147 million level, I believe. Let's go ahead and hold ourselves to the flame of our prediction from last live stream. So we don't put out two sides and say pay us to join our group. We just put out one side that plays out. modestly and humbly. So we were looking over here at this fatigue of our cloud. What is that cloud we're talking about? Well, we were looking at this trend cloud kind of shifting. We always say trade with the cloud. So the cloud was above the price, expressing fatigue. It couldn't get above it, couldn't get above it. We were seeing the markets possibly turn over. We were looking at a pool here at 44,137. It came and gobbled those guys up over here. And
fatality.
And yeah, that's why you should suggest always paying yourselves for that. So let's go ahead and look what's happening now as the shorts open. The Johnny come lately shorts opened up here, 315 million about an hour and a half ago, and those guys are getting obliterated as it V-shapes into 81 million, 189 million, 222 million, 189 million. These short pools are obliterated.
Fatality.
And now they could be possibly even be shaping up to this 43.2. Those people that open into these limit zones, they need to consider paying themselves quickly as they become the liquidity for the shorts to close out into. And yeah, let's expand our vision to the higher time frames. Okie dokie. Shout out to everyone here. What's up? What's up? Okay, so on the 7-day time frame, there is no more on that 7-day path. They came and gobbled up all the 7-day liquidity. And going to the monthly, so the weekend could just be a little bit of inducement down in this region as they reprice down to here. The 50k zone seems like a safe short pool at this time, as the chopping block for 39k is a hop, skip, and a jump away. We could be retracing up to the 45k, but possibly coming to that 40k region and below, as the bullish news and sentiment for the ETF gets abused to the Moon Boys' disadvantage. This is one thing you need to be aware of, is the fear and greed. It was at 70 something, 71 yesterday, so when that gets mighty high above the 70s, you need to consider closing your short longs and opening shorts, perhaps. What am I doing here? So yeah, on the 3-month time frame, you got a bunch of liquidity down below, less up above, so we could be seeing that pre-halving retrace we were talking about with that wrecked capital analysis about the pre-halving retrace. Check it out. Okay, so let's go into the momentum and see what is going on. Well, first let's clean up our math and see if the math needs a little bit of adjusting. Let's turn this off and see what our levels are. So we came down to this 236 yet again. We've been talking about this as the bullish trend-based fib level from this impulse and this retrace here, impulse, retrace. That impulse retrace math has you at hello. If you can hold that 42,114, which we did, then you could be still slated for those upside paths. Let me go ahead and delete some of these wicks. Okay, so all right, so the math. Do we hold this fib in place or do we adjust it? So we've been seeing less aggressive stabs up before and a lot more retraces into the liquidity here. So that is also kind of creating this rounded top idea where we're kind of getting slower in the progression upwards. This last impulse retrace was the last aggressive one, and the aggressive retrace. So all of these returns to this 42,114 are important to note. Do we continue back up into this? We always call this the trap door. And this trap door has served us well, the 706 at 45,874. When we rejected off of that trap door right there, right here, boom, trap door released. And that is why the 706 is a good level to watch. We had it happen here too on the 3rd. All right, so we are back at this wick area. We closed out a candle above the 236, above this wick. We even ate into about half of that wick over there. So we came into this hourly wick, recouped about half of it, and we have yet to recover it in its entirety down at 40K. If we go to the 40K, there's all these equal lows, relatively equal lows down here. So just a sweep of all of that would make the most sense. So this entire group of longs is on this sell side, is on the chopping block. And then we have that entire 39.5 region down here. So even if we retrace up into this gap over here, there's a gap up here, for example. Even if we retrace up to here and reject, we could be putting this at a continuation ABC, ABC. And this could just be another ABC to the downside. A, B, see ya. So that's just looking at the math and the gaps in liquidity. This is also a resistance zone. I'm not going to call it terms that are by the trend right now. It's just support and resistance through and through. Liquidity is a concept that's been around for ages. Supply and demand has been around for ages. It's not invented by anyone that people idolize. People need to stop worshiping false idols. All right, so here we go. So let's go to the momentum, shall we? This is where it has you at hello for a lot of times. Link in the description for more. And you can scroll down to the features and basically turn on all of this glory at the schematic idea of does this hold and create double bottoms, come back above the cloud and bang to the upside. This is your schematic to look for with the trend cloud, the baselines, and the stochastic array and more alerts to your phone. So this is kind of what we were looking at. You can reverse it too and see, you know, double bottom kind of ideas for that. All right, so let's go ahead and turn it on. So we're starting to get these X's. The X's are the medium to high time frames getting oversold now. The circles and the diamonds is a mixture of the two, but weighted on the lower time frame. So you had 4 time frames oversold, 4 time frames oversold, and then you're now starting to get higher time frames oversold as the daily resets. So we're going to start on the daily time frame and talk about that 3-day. Because we've been warning you about the 3-day for some time, haven't we? Have we or have we not? We talked about this since December 15th, talking about the cross down event. And even if we did something like this where we went up, we would be coming eventually back down. These things are very, very backtestably true, let's say. Granted, you had some meandering around here, but even if you just ignore the meandering and take each one at face value, it gives you some profit. So this falsehood here, we had a cross down, a cross up, a cross down. This cross down paid you from April of last year to the tune of 19%. And this one that was a little bit clearer in this setup was it came back to the entry and basically played out for another 17%. So we were talking about this cross down since December, saying that even if we did get an April Fool's style one from last year, like coming up like this, eventually you'd have a big red candle coming back to the downside. So there'd be a fatigue, and we were saying that fatigue point would be up here in this one area. We haven't changed our tune, we haven't said 50K, we haven't said any of that. We just talked about this being the fatigue point, and why we talked about all of this range bound top area confluence, the daily resistance yellow line here. And so now we're back, and the 3-day being suppressed from takeoff, the Williams starting to come down here, the money flow and the RSI starting to come down to the 50 level. Do we continue lower? Do we break this 236? That is all in the next 3 days, something to look out for. Daily time frame. Daily time frame is now beneath the cloud. We were talking about the tapering effect of the cloud and how it's starting to point to that possibility of that 3 o'clock angle. And now we closed a daily candle below the cloud for the first time since September, so basically October 1st. So yeah, this cloud is starting to show a sign of weakness on the daily time frame as well. We're starting to get that cross down helix too, the cross down event from that candle over here. So you have a cross down event of the helix of the baselines. The baselines you can read about here. They are your first sign of reversal. They're leading, one of the few leading moving average formulas on the market. Okay, so going to the oscillator. Oscillator coming down nicely on the stochastic, the money flow and RSI at even Steven levels. Williams possible suppression on the horizon, so watch out for longing in this range. You're getting the cross down event as well, not in alignment for a long. Same here on the 22, you're getting the cross down event on the 22-hour time frame. So any type of bounce we get could just be people closing out the shorts and re-entering with the fury, so be careful for that. Coming to the 12-hour. 12-hour time frame closed ultra bearish, cross down events on the baselines, and you're getting a reset of that. Money flow and the RSI came down to the money flow, one of the rare occasions where it does that. And going to the 6-hour, 6-hour probably did the same. So the 6-hour, the RSI came down to meet the money flow. This is one of the rare occasions where it does do that on a market rotation beginning. That's where that happens. Cross down event on the 6-hour was from back here, as that's why it's leading. It gives you the insinuation of the move beforehand, and then you watch candles close beneath the baselines for confirmation, and boom, 6-hour cross down event inbound. Also beneath the cloud on the 6-hour starting to taper. Even if we do a bearish retest, this could be your higher probability idea for that downside path. Okay, coming to the 4-hour time frame, also beneath the cloud. We broke it with fury at that 706 trapdoor, this blue line coming down lower, holding the 236. Do we come up to here, recover this gap on the hourly time frame? 4-hour oscillator coming down nicely, money flow and RSI getting to oversold levels. Leading MACD coming down below. This is a leading MACD formula. Everything in Momentum Master is leading, so it gives you that information first. You can get the cross down events of the MACD, the pump and dump on whatever time frame you want using that leading MACD formula. It is the normalized MACD to a smaller framework, so it's super sensitive. So you get that cross back here on Friday in the morning at Thursday night. So you would have gotten that up here and then basically adjusted your strategy accordingly on that 4-hour time frame MACD cross. And the MACD cross back down. Now we're coming down to the Williams domain, and then it's getting set up for a potential scalp long to this region perhaps on the 4-hour. So the 4-hour starting to reset in a manner here as you get that higher time frame suppression of the 12, the 22, and the 6, and the 4-hour getting geared up alongside these lower time frames. So the lower time frames, the hourly, already in that position, MACD down to the dumps down at the down in the Williams area, and you're getting the Williams rising sun here. The funny thing is let's take a timeout break real quick. The thing that I can't understand about this guy idolizes Larry Williams, considers him his mentor, yet disparages on indicators. How can that disconnect occur? Larry Williams, the person who made the most profit in all futures trading competitions, inventor of this Larry Williams %R that's at the bottom with this rising sun, and yet you disavow any like ability to use it. It's like, yo bro, like, why don't you actually take the time to understand how the formula works and align them across time frames like that? Just because you don't use it properly doesn't mean it's not useful. Same with anyone that disparages on indicators. Why don't you actually take the time to understand them? I really hate how people kind of, it's become trendy to hate on indicator people, but the indicators clearly show that they work. So if they work, why would you hate on them? So anyway, the time back in. So this rising sun event, this is a backtestably true level. When this rising sun, it looks like a valley in the mountains when this average of the Williams comes to this pool in the valley, and then the rising sun comes up, the light comes over the horizon, then boom, you could be getting some upside like we did here. So this hourly time frame could be doing that alongside the 4-hour here, the 1 hour and the 4-hour in your favor for a long. So if we go to the 15 had some false rising suns as the higher time frame suppressed it. As you see these diamonds starting to get oversold, but not getting a majority yet. The majority is in the X factor. If you join the Discord, we do have a quick guide on all of that here. This explains what all of these mean. Basically, the X's are a majority of 3 medium time frames exhausted, but we go over that anyway. But yeah, there's a majority of time frames exhausted. But if you look at it here, it starts to get in that setup like this. You get these 5s and these 6s, and then boom, then you start to go up. So we're not in the 5 and 6 range, we're getting 5s here, but are we at that precipice for a long just yet? Not quite. We'd have to see it come up a little bit and fade, and then come down for a double bottom potential event. But we're getting there. So the 15-minute cloud still bearish, no signs of pointing up just yet. So you have this still pointing down. When you start to get the cloud to curve a little bit here, and then you have something like it comes up to here and fades, and then you come up to here and reclaim it, then you could be looking at something around here. Once again, we're in the weekend, so I expect some sideways action. So it's going to trade in this range perhaps and induce some people in to the charts. As it comes up here, we're going to come up to that 43,472 region, reclaim some of these short pools that opened into support, possibly coming to the 44K region. 44K would put you at the top of the range here. So yeah, we could possibly come up to that and reject and then come back down. You never know. So still got the 15 pointed to the downside, not the proper time for me to be looking at longs. And if we go on the broader market, like total market cap, so let's go to the total market cap and take a look. We had this exhaustion print on the 4-hour for the nukes here across the total market cap as well as on the alts. And this was on Thursday afternoon, and from that point we've just seen downside. So A plus on the signals from Momentum Master, congratulations to that, telling you the fatigue was inbound on the crypto markets. If we go to the Bitcoin dominance breaking through all of these levels, basically going to a deeper retrace. We broke the 886, dominance falling off of the spectrum. Why is that happening? Well, we talked about ETH BTC and people buying ETH with their Bitcoin. Why did we say that? Well, the ETH ETF approval is on the horizon, and we are also getting nukes here, rockets, and the rockets took off. So they're holding the gains in ETH. So the people are buying ETH with their BTC in the expectation of ETH potentially going higher. So ETH had this takeoff and getting some fatigue, but still holding clean levels to potentially keep going. So people are buying up ETH with the BTC on the side as it stands right now. And then if you go to the USDT dominance, we had the rocket ship down here in hitting a key level for market reversal, and sure enough, boom, hit people into USDT. When the USDT dominance wants to go up, it knocks people into USDT, meaning out of their trades. So all of the longs get knocked out into USDT using this upside projection. So the rocket ship told you market reversal is potentially inbound, as you see the nukes on the total market cap and see the fatigue as we go into the resistance and the greed levels get really high. And we were warning about this, surprisingly so. We were going back in time over the last few days, talking about September 7th, 2021, back here. And this was when El Salvador adopted Bitcoin as a currency, official currency. Everyone was bullish. Approval of Bitcoin, all thumbs up, bullish news, and boom, it dropped. Dropped to the tune of 18%. 15% of that in like 10 minutes down here. I remember it like it was yesterday. So it happens. Bullish news doesn't mean it goes up. It actually means the opposite most times. So that is that. And so where do we go from here? That's fine and dandy. You caught the short, congratulations. The dollar also was in consolidation phase. We had that out since the start of the week, talking about it could go either direction here. We're not sure, but it looks like it's range bound, gearing up for something. NQ was getting another bounce off of the cloud to the upside. We're holding the range here. We could go. We didn't trade yesterday because of the lack of conviction to bounce off the fair value gap, and it just stayed in this range, so I did not trade yesterday. We did have a nice accuracy rate from the day before that. We had 100%, captured 474 ticks for NQ, and so yeah, this day was a nice day with some conviction on that news. So the legacy markets looking to potentially hold this cloud, potentially go up to this, hit the high, as we've already swept this range with that news play on Thursday. So it's possible we react up on Monday. Monday's a holiday, but Tuesday we could be coming up into this region at some point. Okay, so that is the NQ and the dollar. If we go to, back to Bitcoin. So the dollar looks like it could possibly come up into this vector 2 alongside of NQ, although the risk on assets would, if NQ goes up, this would go down here first before coming up to here. Which one does it draw to is the question. All right, so Bitcoin already preparing for more downside paths, sweeping all of that idea off the table, all of these lows. Okay, let's go see if you have any questions. What's up, CNC? Yo, yo, yo. All right, so 15 minutes time frame. So the 15-minute time frame, let's just go try to predict where it will be on this low liquidity weekend. So in a nutshell, all right, so you have these short pools up here to come up and reclaim. Now, if you don't have high block, which we're going to consider canceling in the next few days, so we might be using this instead, but it does this justice just the same. You have some pools up here, basically 34 million. You can also switch to the liquidity map. It will show you that there's more liquidity up in this region. So there's a $387 million up to 44,845. So there's more liquidity to come up to here. One thing you can also use that's a free indicator is this one. Liquidation levels version 2 by ML application. Set your threshold to 0.1 for every $100,000 trader. And then go to the below 15-minute time frame to see where those people enter. And you can basically, we were using this before high block for years, and other YouTubers were kind of copying that style. So as it stands right now, you have a bunch of 100xers in longs that are opening up here. You can see 1.2 million, 390,000, 84,000, 1.29 million. You could see which candle they open by the dots. And it looks like there's more longs here, so they could come down into this, sweep that up, and then start to prepare to go up to these guys over here. So they always come back to the 100x, and then after the 100x, they just constantly bat off the 100x like gnats flying around their head, just like, get off me, get off me. And so you can watch this endlessly, and it does work on coins like Matic and stuff too. There's a multitude of APIs they have connected to this. I think there's 10. They have a bunch of indexes they can connect here. But yeah, that is the liquidation levels indicator. So as it stands right now on the 5-minute, you have reclaimed cloud, but the cloud is still purple and not thinning. So on the higher time frame, you may get some suppression on that. So this is your simple V-shaped recovery to come grab some of these liquidations. So there is something up here in the 43,207 region. We could come up to that 43,207, take out those guys, and then come on down. But basically coming for a double bottom event like we originally said, and then you would come up to here, reclaim, and then go. And then on the 15-minute, you'd want to see the 15-minute cloud curve and thin. And then you would be finding that entry somewhere around here as you SR flip some stuff. And then you would take a fib and you could measure it from impulse to impulse. And it could even come all the way down to here. Who knows? It doesn't have to be shallow. It can come all the way down to there. But you would be looking to measure that impulse of that shift, and then seeing if there's a wick that it provides you with down here, like it wicks down into here and then closes a candle above here like that. And that could happen today. This is Saturday during the London session. Who knows? Asia does not really bring the strength to it, so having Asia come up to here and then double bottom or something, and then pass off to London, which does some manipulation. Or it could wait till New York to have this. This could be compressed a little bit too much, and this is extended out more. But ultimately, there's a gap up here on the hourly time frame that you could come down to get. If we see what the fractal, yeah, this kind of becomes even thinner on a 15-minute, so we can be more precise with that here, the 15-minute gap. So eventually aiming at this one for a rejection and potential continuation to 39K, we will see. But that is potentially where we're aiming at on the horizon in the next few days. But right now we're going to play with the dollar cost averaging trapped longs here and then take them to their demise somewhere down here. And that's my story, and I'm sticking to it. I'm welcome to hear any ideas from you all. If you have something you want to look at, now is the time to ask. But eventually having this retrace up. So we're gonna just clean this up a little bit. You come up a little bit, come down. Something like that. Reject off the cloud, keep the super trend intact, come back for that double bottom idea. All right, let's go check it out. Great show as usual. Have a good day. Thank you, Steven. You too. Thank you. Thank you all for coming on in. I appreciate you all. So if you look at, this is for fair value gaps. If you don't understand liquidity voids and these places where people have not yet traded fairly, so they're in profit from the start and they need to go back to rebalance, that's this indicator here, fractal breaking balance, fair value gap, liquidity void. That I don't need it so much. Basically how it's calculated is you look at the wick over here, the wick on the candle before the candle you're looking at, and the wick of the candle after, and there's a gap between those two wicks. That's the fair value gap. So from here to here, and then after a while you get used to seeing it, so you don't even need this to draw that gap for you. The reason why it's now compressed is if you go to a lower time frame, that wick will have changed. And so when we go to the 15-minute, the funny thing is we were looking at gaps years ago before these smart money concepts were popular, and then everyone has essentially abandoned yours truly's thoughts on these things, because it's the cool thing to do is trade smart money. If everyone's trading smart money, then isn't it the new retail? That's the isn't indicators the more path? So you see here the wick and the wick. So this wick is here and that wick is here. So this 15-minute candle traded just straight with downside with no upside. You can go into the 5-minute and see that even more finessed here. Like you could go down to this wick here, and if I turn that on, it should highlight that. Yep. So it'll tell you where those gaps are, and then inside those gaps, if you don't have high block, like if I look at this price level, let's just say 45K, so there should be a large amount of liquidity at 45. Let's go see. 45K. 45.2, 44.9. There's 177 million. That's pretty decent amount, a decent pool up at 44.905. So within that gap is $177 million. Granted, there is another $315 million one that did it into this gap that we're V-shaped back into, and that's why we're V-shaped back. Somebody opened a large short, like, okay, you want to pay me, and it's just coming back to that 44K mark. But that's why as they eliminate those guys, they'll eliminate those guys and then continue on their merry path to kill the trapped longs. Eventually they kill those guys and start to come back up to the short that has not yet been tested. And that is how the narratives are built from scratch. And then looking at these time frames get oversold and fatigued and getting alerts to your phone about it. And yeah, that's my story and I'm sticking to it. So let's see if you have anything you want to look at. No? Nothing? Nada? De nada. Alright. Well, so expect the weekend to hang out here for a little bit. You do have the baselines on the hourly starting to get beneath the price, but I wouldn't trust it just yet. It would come down for that double bottom event at some stage over the weekend and then maybe make its way up to here. And that's my story and I'm sticking to it, folks. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff, and we'll catch you on the flip side. Peace!